All right, Chase, ready for another company?
Let's do it.
Let's talk pizza. You want to talk pizza?
Let's talk about some pizza.
Let's talk about Papa John's International. I don't think I've eaten there, not very much. I usually just think of Pizza Hut, but let's see.
You go Pizza Hut? I always think of Domino's.
Oh, Domino's. I'm sorry. I meant Domino's.
I was like, I've eaten at a Papa John's more recently than Pizza Hut.
Yeah, I'm sorry. I meant Domino's. But let's look at Papa John's International. Their symbol is PZZA. They're in the restaurant industry. Not a good start. 18.1% short on the stock here. That's pretty high. We do see a P/E ratio, which means they have earnings 22.8. That is below the industry at 29.8, but still kind of high. Price to sales looks good, 0.8 versus 2.4. Unfortunately, no price to book value, which means their liabilities exceed their assets. We don't like seeing that. Price to cash flow, but they could be a franchise. I think they are a franchise. Yep, there we go. That's a problem. Price to cash flow is 13 versus 16.6. That's a positive. PEG ratio, very good, 1.9 versus 43.4. Now, unfortunately, their earnings over the last year, they're down 21.1%. Industry up 1.8. Sales for Papa John's, they are down 0.7%. The industry up 3.4%. The analysts going out 5 years, they see something here because they say their earnings are going to go up 14.9% over the next 5 years compared to the industry growth of 2.7%. They do pay a nice dividend. I like this, 3.5%. They use 80.4% their earnings to pay that out. A little bit on the high side, but I think still sustainable. If you look at the cash flow of the company, we do see that, let's see, the dividend payout ratio for the free cash flow is 107, so that's a little bit high. Let's look at the balance sheet. We got a current ratio of 0.8 versus 1.2. No debt to equity because there is no equity. Again, we talk about the franchise issue there. We do see a net profit margin 3.6. That's about half the industry at 7.9. Return on equity a negative 17.4. Don't like seeing that. Again, has to do with the situation with the franchise. Free cash flow not very good. It's 57. I believe this would be 57,000, maybe 57 million, but the industry's at 3 billion. So that kind of, I'm not liking seeing that. I would like to see more free cash flow from the company. What do you got, Chase?
Absolutely. Current price for Papa John's, again, their ticker symbol, I think it's a creative one, pizza, PZZA again. Current price, again, $52.01. 52-week range, I mean, the low here is $30.16 and the high $60.75. The returns for the stock, this year so far have been good. They're up about 27%. But you look over the last 5 years, you're down about 32%. Last 10 years, you're down about 25%. That is not inclusive of dividends, so you may have done a little bit better with the dividends. But I look back at 2021, I was kind of blown away by this. The stock was trading, it looks like around $135, $140 a share.
Wow, that was probably time to get out.
Yeah, in hindsight, definitely was. Looking forward for this company, though, a little disappointed. Go out to December 2026. Estimated earnings per share here, $2.22. We get a target sell price at that level of $36.85. Forward PE is now around 23, 24 times. Now, I'll tell you, I was a little bit hopeful on this. I thought there might be a little bit of an arbitrage situation with Papa John's because came out this past week, the stock popped on the news that, what is the name of the firm here? Apollo Global Management supposedly implemented a new bid or offered a new bid to take Papa John's private at $64 a share, which would be about 25-ish% above the current level.
And the problem, because we've done some arbitrage before, but the thing you have to remember if you're doing that, Apollo Group, I think you said is going to buy 20% more or whatever. That is great, but you have to realize that deal may not go through. If it doesn't go through, you don't want to be left with a junk company. You've got to make sure if you're going to do this arbitrage situation, you're investing in a good company that if it doesn't go through, hey, I'm fine. I still got a great business here. Good price.
Yeah, and I do think the odds of a deal like this going through is decently high. I mean, I don't know how far along in the process they are is the only problem, but they're not really a competitor that's going to maybe run into issues with the regulators about lack of competition.
Plenty of pizza places around.
Plenty of pizza places. So I don't think that would be an issue. I did look up too, because I know obviously the founder, John Schnatter, who
I thought it was
Papa John.
I thought it was John Pizza. I guess not.
But I was curious because sometimes the owner of that company could derail it if they have too much in voting stock. I'll tell you, we went through this where we actually had a company that had a buyout that I think was more favorable for shareholders, but didn't come to fruition because the owner of the stock had voting rights and they were able to kind of do things that I think were wrong. But it looks like he's only got about 5.7% of the shares outstanding. So I don't think there'd be many roadblocks if Apollo actually wants this. I think it will go through. It is kind of interesting. Papa John, he did. I don't think he goes by Papa John. Maybe he does. But in 2019, it looks like he owned about 31% of the company. So he got out. he did very well.
116, he probably sold that, got out with that stock then. So, but
yeah, you're so right. You don't want to buy a company, especially with upside of 20%.
Yeah.
There, I think, is much more downside to that if the deal doesn't go through than getting a 20% gain.
Yeah, and you could be left with something that's not very good. So.
And actually, I misspoke, and he actually maybe didn't sell at a great time. Depends when he did get out, because 2019 the stock was around $50 a share. But if he sold again in 21, he probably did very well.
That's true. So,